Hello, my name is Chris Cordova. I'm the Financial Wellness Coordinator with Foundation Communities. We're going to be talking about credit reports and scores. So we're going to go ahead and get started, and we're going to dive right into this. Hopefully we're making credit reports and scores a little bit clearer from anything you may have thought of in the past. We're going to try to give it a little bit more relevance, and so it's not this mysterious item, this mysterious report that has like a lot of impact on whether you get approved for a loan or not. So hopefully you're coming away with this video as understanding what's in the report a little bit more, how they come to those conclusions, how they come to those numbers, and just things that you can do in your day-to-day life that can help you increase your credit score and just kind of give it more reality and more of an understanding than what you might have right now. So let's go ahead and start. So we're going to take a look at the credit reports and how it reflects with your credit history. Our key takeaway is your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. Understanding your rights helps you know how to protect your credit history. Now, we're taking a look at what is listed in a credit report, and that's your identifying information. That's going to be your name, your date of birth, social security number, these specific identifying informations that's unique to you. Your debts and some bills, so any loans you may have taken out, car loans, credit cards, any bills you may have not paid back would all appear there. Some public record information, if there had been any charge-offs or any disputes that may have gone to court. Your applications for new credit and other inquiries, if you've applied for new credit or an apartment complex has run a credit report on you, that would appear as well. Now, we deal mainly with three main credit reporting agencies. These would be Equifax, Experian, and TransUnion. These are the three organizations that are maintaining some type of credit report or credit score associated with your name or your social security number. But those are the three main organizations that would keep that information. What is a credit score? This is like the obvious thing that we should be asking ourselves. So it is a number based on information in credit reports. It predicts payment of bills and debts as agreed. And people with higher credit scores are likely to present lower risk to creditors. In general, a credit score is a number based on many factors, but it's pretty much trying to dictate and trying to figure out how likely you are to pay back debts that you have taken out on time. And that's why they're taking a look at what your last, and it usually goes back about 7 years, but it wants to make sure that you're making payments on time, that you're successful with that. If you're taking out a loan, that you're keeping up with that loan, that you're not going away or hiding, or you're not defaulting. This is what it's managing the risk of how likely you are to pay back any debts you take out. So who uses credit reports and scores? It's going to be financial institutions, which are credit card companies and banks, lenders, some landlords, utility companies, some cell phone companies, insurance companies in some states, employers in some states, and some state agencies and affiliated organizations. So, risk-based pricing. Credit reports and scores may be used as one factor in risk-based pricing. Lenders set interest rates and other terms based on estimated risks. Therefore, if you have a lower credit score, you may be paying more for the same product as somebody with a higher credit score. but it's based on what your credit history is dictating on those terms. Now, it must tell you if they used your credit reports or credit scores to deny your application or offer you less favorable terms. Adverse action notices and risk-based pricing notices. That's what they're called. So if you were denied credit or denied access maybe for a car, or you were given like a really high interest rate or high monthly payment, they should have, the financial institution should have disclosed that they did use your credit score and that it came back adverse or not in your favor. So therefore, you're paying an additional amount. Now, having no credit reports or scores. This is sometimes referred to being as credit invisible. Therefore, you don't have any track history. There's not a credit history to back up or that's associated with your Social Security number. So it may result in having a harder time getting credit or a loan, renting an apartment, getting a favorable cell phone plan, obtaining some jobs, or turning on utilities without paying a large deposit, which can be common. Now, opting out. You can opt out of receiving pre-screened offers of credit or insurance for 5 years or permanently. You may still get offers based on lists from other sources. If you opt out, you can opt back in if you'd like, but you can't opt out of having a credit report. Pretty much if you're over 18 years old, you have a Social Security card or a Social Security number associated with you, and you're taking out some type of loans, or you've established yourself with renting or getting some type of credit card or cell phone plan, ordinarily there is some type of credit score out there that you're accumulating that you might not be aware of. So it's definitely good to follow up to find out what is out there, and it's not hard to do. And we'll get into that a little bit more. So just coming back to our section 1, remember the key takeaway is your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. Understanding your rights helps you know how to protect your credit history. Now, section 2, we're going to go ahead and review credit scores. So you can take steps to improve and manage your credit score. This includes paying your bills on time as agreed. Paying your bill on time is probably something you're going to hear a lot right now, so definitely keep that in mind. The basics of credit scoring. Number calculated from information in credit reports. So based on the information in your credit reports, that's what gives you the number in a range from about 400 to 850. Now, generally, higher number equals a better credit history, and it predicts the likelihood of payment of credit obligations on time and as agreed. 2 significant factors that affect your credit scores: whether you repay debts on time and as agreed, and what your credit utilization rate is. Whether you repay debts on time and as agreed is 35% of your credit score, and your credit utilization rate is 30% of your overall credit score. We're going to dive deeper into this, but these are probably 2 of the most key things you can do in order to help build a good credit history and a good credit score. Some more basics of credit scoring. There are multiple producers of credit scores. Like we said, there's the 3 credit bureaus. You likely have multiple credit scores out there. So there's the FICO, which is the Fair Isaac Corporation, the Vantage score, and there's others out there too. Different industries may carry their own methods of creating a credit score for you. So like your car industry, your housing industry, they may all have their own formula that they go by based on how you paid your rent or how you paid a mortgage, how you made your car payments. So it may differ based on the types of credit that you're trying to seek. Now, it does sound confusing, but just be aware that there are different methods and different algorithms that are used by different lenders. Now, this is probably one of the most useful screens that I use in order to teach about credit scores. Now, this is your pie chart, and these are the 5 factors that the FICO, general FICO model. Now, primarily, your payment history is 35%. I'm going to go ahead and raise that up a little bit. But your payment history is 35% of your total credit score. So that means that you're making at least a minimum payment that you agreed to on time. 30% is the amount owed, the amount of debt or what the type of balance that you're carrying. That's 30%. So hypothetically speaking, if you have a credit limit of $1,000, you want to make sure that you're keeping your amount owed under 30%. That's a rule of thumb. But in that you're not maxing out that card. This is called your credit utilization. Your credit agencies want to make sure that you're being responsible with the credit that's being allotted to you, and that you're not receiving $1,000 worth of credit and you're going out and spending $1,000 the next day. They want to make sure that you're being responsible with it, and that you're taking on only the debt that you can afford. So by doing this and by being responsible with keeping your balances low, this is the amounts owed aspect, which is 30% of your overall credit score. Now, the length of credit history, this is the length of which you've taken out a loan and you've been successful with paying it back. A lot of individuals want to pay off a credit card and clip it up, cancel it, and get rid of it. That is probably not the best method to use when it comes to length of credit history, which is 15% of your credit score. You want to be able to pay down that card, maybe pay it off, and maybe put a little bit, charge a little bit of it each month and pay it off that month. And do that for the length that you have the card. It's because this is going to build your length of credit history. This is showing your creditor that you are responsible with using that credit card. The credit mix is 10%. This is an aspect of lenders want to see that you're responsible with different types of credit, so that you're being responsible with a credit card, maybe a student loan, maybe a car loan, and that you're successful with paying back these different types of loan. Now, if you're starting out, I wouldn't get too caught up in creating a diverse mix of credit. I would concentrate on being responsible with the loan card, making your payments, and not charging over the credit limit or keeping your balances under the 30% of your credit limit. The other aspect, the last part, is the new credit is 10%, and they're taking a look to see how many times you're applying for new credit. If you're trying to apply for new credit every time you go into a department store, or you're applying for credit on a regular basis, this is going to be a red flag, and this would affect your credit score, but it's only 10%. When thinking about this pie chart, think about it. I always say 35, 30, 15, 10, 10. And I repeat that over and over, but it also gives me the idea that 35 represents your payment history and paying on time. 30% is the amounts owed. That's the balances, that your credit utilization, that you're not going over your limits. Your length of credit history, how long you've had a specific amount of credit out. Your credit mix, the different types of credit, and the new credit that you're seeking. So 35, 30, 15, 10, 10. This is kind of the backbone. This is kind of the rules that you are going to use in order to build your credit score. This is like knowing the rules of basketball, knowing the rules of football. When it comes to football, where a first down is, knowing how much a field goal is, those are the rules of football. This is the rules right here. This is the cornerstone of building your credit. Making your payments on time, not being responsible with the amount of the limits that you're being offered, that you're keeping lengthy credit histories, and that you're keeping good mix, but don't get too caught up in that, but also that you're not trying to seek new credit all the time. Once again, this pie chart is successful, is a good way. I'm a visual learner, so really kind of having this burned into my memory has helped me quite a bit in trying to understand how a credit score works, and also just keeping on top of my month-to-month choices when it comes to using my credit card and paying it down. So when it comes to ordering your credit scores, it may not be the ones that you are used. If turned down for credit, you have the right to see the exact score used and make sure your credit score accurately reflects information in your credit reports. You may want to make sure, if you were like a junior, if you have a parent that you have the same name with, that your information isn't getting mixed with them, or if you have a relative, or that everything on there is reflective of the choices you've made and that you are aware of everything on there. Get and review your credit reports and dispute any errors. So this is kind of a range of what a good credit score looks like. And this can go, like I mentioned previously, your credit score can be anywhere from 850 to about 300. 300 would be the bare bones, just having a name, having credit, having a social security number. And this is an example based on the FICO's model, the FICO model. So a poor score is going to be considered anywhere from 300 to 579. A fair score is anywhere from 580 to 669. Good is 670 to 739. This is kind of the area that you definitely want to shoot for or above. Very good, 740 to 799, and exceptional, 800 to 850. Now, just in case you are anywhere in the fair, the 669 down to, or to the poor down to 300, do not overthink it. Do not take it too personally. Remember, you do have opportunities to change your credit score all the time. Your credit score is in constant influx. So there are a lot of opportunities to repair that. We can assist you in putting together a strategy to help you. Remember, go back to the model of the pie chart of 35, 30, 15, 10, 10. And those are the things you can do to improve your credit score. You're not your credit score number, and you always have the opportunity to improve it. It changes every month. Let me repeat that. Your credit score changes every month based on the payments that you're making and based on your credit utilization. So it's constantly changing, and you can make the choices whether or not you want to continue to improve it, or if you want to keep it to where it is. If you decide not to make your payments on time, if you decide that you're going to max out those cards, that's definitely a good way to drop your credit score and have it more in the fair to poor area pretty quickly. But keep in mind, the staff here at Foundation Communities and our financial coaches are here to help you if you are looking to improve a credit score. And this becomes very popular, especially when people want to attend or want to take out a student loan or purchase a new vehicle or even purchase a house. So remember, the key takeaway here is you can take steps to improve and manage your credit scores. This includes paying your bills on time as agreed. There's the right to additional free credit reports. You can receive public assistance if you're receiving public assistance, if you're unemployed and looking for a job, if you're a victim of identity theft or financial fraud, if there's a state law that provides for a free credit report, if you were ever denied credit, service, an apartment, or employment. Now, getting your credit scores, some nonprofits, organizations like us, foundation communities, we can provide a credit score for you. We can provide a credit report. Your credit card statements or websites can definitely provide that information for you. When you have a right to a score, the few ways that we just explained, and you can go on myfico.com, Vantage Score, the vantagescore.com, and your 3 nationwide reporting agencies, Experian, Equifax, and TransUnion. So there are various ways for you to get that information. So we definitely encourage you to do that and be aware. And you can also give us a call and we can assist you with that. Also, your banks would be a good place where you can have a conversation with a banker and find out what your options are there. Remember, the key takeaways: get and review your credit reports at least once every 12 months to make sure the information is accurate. You definitely want to make sure everything on there is as were the actions that you specifically took and no other people had access to your information, which you are now being reported on your name, within your name, or your social security number. Now, we're going to move to section 4. If you do find errors on your credit reports, file a dispute right away and be sure to keep records and follow up. Errors on your credit reports, they could be identity errors, incorrect reporting account status, data management errors, balance errors, outdated information. Time limits on negative information generally can only be reported on credit reports for 7 years. So that means, say you made some late payments, maybe you had a charge off, that's only going to remain on there for 7 years. Now, if you file for bankruptcies, that would be an exception because those can be on your credit report for up to 10 years. The 7-year reporting period can be confusing, generally starts 180 days after you stopped paying on the debt. Now, when it comes to medical debt and credit reports, medical debt generally is not on a credit report until it's for at least 180 days. If it's on that unpaid status for 180 days, that's when it tends to pop up. And it provides time to resolve billing disputes, make payments, and make payment arrangements. Now, how to dispute errors on your credit reports? Your first option would be going online. Your second would be going through mail. After you file a dispute, a credit reporting agency will send you a letter. Incorrect information cannot be put back. Check to make sure, and you can request notices of corrections to be sent to individuals or businesses that received your credit report. Remember, the key takeaway here is if you find errors on your credit reports, file a dispute right away and be sure to keep records to follow up. Section 5, this is how we're going to build, repair, maintain a productive credit history. During the section 5, our key takeaway is your credit history does not have to be your credit future. I did mention that earlier. So these are just we're going to review some ways that you can definitely improve your credit and some things to kind of just keep in mind as you go on. So if you're looking to repair and improve your credit, get and review your credit report, find out where you're starting at, and find out kind of what's already on there. Dispute and correct any errors, first of all. Pay all of your bills on time and as agreed. Remember, that's 35% of your credit score. Use as little of your credit limit as possible. Therefore, like I said, if you're offered $1,000 as your credit limit, do not use all $1,000. Keep it under 30%, which would be about $300 in that case. And just try to keep it under there and pay off if you can. Charge a little bit each month and pay it down every month. That's going to build up, that's going to shoot up your credit score, and it's also going to be a way to avoid paying any interest fees. Use a credit building strategy. Keep old accounts open if you can, because that's a good, because that's going to improve your credit score. That's 15% of your credit score. Apply for credit only if you need it. Do not try to have 20, 30 credit cards open and max them all out, especially if you know yourself pretty well. Try to use one, be successful with it. If, then kind of go from there and take out an additional one, but definitely use the credit that you can use and be responsible with and go from there. Just start trying to implement good habits at that point. Negotiate different terms. After you've had a credit card for about a year, you can then negotiate with the credit card company a lower interest rate or more, a higher credit limit. But they do want to see that you had been successful for at least a year before you can initiate those conversations, and ask for a goodwill deletion. That would be usually like done on a one-time basis of if you would say you were like late on a payment. Ways to build credit: get a secured credit card. The secured credit cards can usually are credit cards that come with the collateral, that funds that you're putting down. So that's going to cover the cost of making it defaulting on the card. But by doing that, you are building your credit each month by being successful with making your payments on time, which would increase your credit score. Get a credit building loan. That would be a loan that you're taking out in order to build your credit. It would work in a similar way as the secured credit card, but rather than a card, you're getting a loan. Become an authorized user on an account. If you have a parent or family member that has had a card for a long time and you become an authorized user, they allow you to be an authorized user, that could build your credit score. Get a co-signer, that too. Now, being a co-signer can work in two ways. If you add an additional person on and they are not successful with paying that debt back, it can affect your credit as well. But if they are successful in paying that back, it can improve your credit. So there are definitely two ways to go about that. Apply for a credit card at a store or gas station. Those would be two ways where you are establishing your credit and it's only for one specific business, so you're not tempted to use it at various places. And make a large down payment and negotiate a loan for the balance. So that would be, so those are ways to build your credit. Ways to maintain your credit: pay your bills on time and as agreed. Continue to pay down your debt balances. Keep the proportion of the credit you use low compared with the credit limits. That's kind of what we were talking about with your credit, your utilization. Don't apply for too much credit. If you think that you're applying for a $10,000 card, but you may be tempted to purchase furniture and trips and some other items that you might not be responsible with being successful with paying back. You might not want to take out so much in credit. Pay your taxes and child support in full and on time. Check your credit reports and regularly dispute errors, and keep good financial records. Also, avoid actions or inactions that may create new entries. Try to exercise some self-control when it does come to adding new purchases on those cards. Now, if you're looking to get help, you can come to financial institutions such as your bank, or you can speak with the credit card companies or maybe any lenders that you may have taken out the loan with. Nonprofit consumer credit counseling services, that would, we do have services, financial coaching here. So, and there are other nonprofits here in Austin that we can refer you to. You can also follow up with housing counseling agencies approved by the Department of Housing and Urban Development. also known as HUD. Financial education, nonprofit organizations, that would be foundation communities where we can assist you with that. Certified financial planners as well. That is one way you can, if you do have a financial planner at your disposal, you might want to follow up with your HR department to find out if you do, and you can discuss ways with your financial planner how you can start building your credit. Now, there are some businesses out there. They're the credit and repair and debt consolidation companies. So credit repair companies promise to fix your credit for a fee. Debt consolidation businesses offer different services, often specialize in debt consolidation loans and debt settlement services. Be cautious while following up with these types of businesses, because debt consolidation, you are taking out a new loan to pay off other debts, and it does not address your underlying causes of debt, which may have been that you were just kind of taking out a little too much more debt than you were able to pay back. When it comes to debt settlement, working with creditors to accept lower payments and settle debt, you might have to pay income tax on a portion that was settled on. So just be aware that in some of these services you could possibly receive for free through the financial nonprofits throughout Austin or throughout Texas. They can, we are here to assist you, so you don't necessarily need to pay a business funds that you may be able to get for free through a nonprofit. Just keep that in mind. Credit repair scams. Beware that credit repair companies that promise to erase bad credit or remove other negative but accurate information, promise fast and easy credit repair. Usually, credit repair takes time. So if a place is offering something that's going to happen fast, that should be your first red flag. Offer to create a new identity for you, another red flag. They may try to get you a new social security number, which probably is possibly be illegal, but just be aware of what you're getting yourself into. And they want you to pay fees up front, and they will not tell you about your rights. Remember to always find out what your rights are. Now, when it comes to protecting your credit history, look out for your initial fraud alerts, active duty military alerts, extended fraud alerts, credit freezes, and credit locks. These are all things you can do in order to protect your credit history. So remember, Section 5's key takeaways is your credit history does not have to be your credit future. There are ways and methods you can implement in order to fix a current situation and to improve your current credit score. So now it's time to take action. It's time to put a plan together and ask yourself, what will I do? How will I do it? And will I share my plans with anyone? If so, who? If this is something that brought up some ideas for you, I definitely encourage you to give us a call here at Foundation Communities. Set up an appointment with one of our financial coaches. You can give us a call at 737-717-4000, or you can find us at foundcom.org. So hopefully you found this information useful, and it kind of cleared some matters up for you and kind of gave some more relevance to what is involved in your credit score. If you do have more questions, feel free to reach out to us here at Foundation Communities. Well, my name's Chris. Thank you very much. This was a longer video, so I really appreciate you sticking around the entire time. And give us a call if you want to follow back up and have a further discussion about your credit report. Thank you very much. Have a good day.